Hello investment champions, and welcome back to the channel. I would like to share with you my very first stock market video about stock market ratios today. We're diving into the world of finance and exploring a key metric for evaluating investments, net asset value per share, NAVPS. This is a very simple but very important ratio. Knowing this ratio is essential to understand the difficult ratios that I will teach you in the future. We'll break down what NAVPS is, how it's calculated, and its importance for savvy investors like you. Furthermore, I will be teaching a useful lesson today on how to figure out net asset value per share. Plus, we'll sprinkle in some words of wisdom from the one and only Warren Buffett on the topic. So, whether you're a seasoned investor or just getting started, buckle up and prepare to unleash your inner financial expert. What is NAV? Net asset value, NAV, of an investment company is the company's total assets minus its total liabilities. For example, if an investment company has securities and other assets worth $200 million and has liabilities of $50 million, the investment company's NAV will be $150 million. Divide that NAV by the number of shares outstanding, you've got the NAVPS, net asset value per share. For example, if an investment company has NAV $150 million and has outstanding shares of 10 million, NAVPS equals $15. Let's go to a real-world example. This is not a buy and sell recommendation, it is only for educational purposes. To compute NAVPS, you have to use data from the Statement of Financial Position, balance sheet, in the company's annual report. I will cover the balance sheet in more detail in a future video. You know how a company has to show its money situation at the end of the year? That's called the Statement of Financial Position, or the balance sheet for short. It tells you what the company owns, what it owes, and how much it's worth. This balance sheet shows the total value of what the company owns, assets, and what it owes, liabilities. To find out the net asset value of this company, we need to include these numbers in the previous formula. The net asset value of this company is $8,939,364,003. The annual report also tells you how many shares a company has issued. This company has 937,500,000 shares. Now we can calculate net asset value per share. Net asset value per share equals total assets minus liabilities, divide by number of shares outstanding. So this company's net asset value per share is 9.54. Why is NAVPS important to stock market investors? For a stock market investor, NAVPS helps in comparing the stock NAVPS with the market price. If the NAVPS of a stock is higher than its market price, it may indicate that the stock is undervalued and could be a good investment opportunity. Conversely, if the NAVPS is lower than the market price, it may suggest that the fund is overvalued and could be a risky investment. For example, in the above calculation, the net asset value per share is 9.54, and the market price of the share is 6.40. This could suggest that the stock is worth more than its current price. So as a summary, NAVPS helps with comparing, spotting bargains, and understanding the performance of stocks. While Buffett doesn't solely rely on NAVPS, he acknowledges its importance. He famously stated, "Price is what you pay, value is what you get." In essence, only NAVPS can give you a rough estimate of the underlying value of a business or stock. Net asset value per share is a basic but valuable tool in any investor's toolbox. By understanding what it is, how it's calculated, and how to use it, you can make smarter investment decisions and potentially achieve your financial goals faster. Remember, like Warren Buffett wisely said, it's all about getting good value for your money, and NAVPS can be a helpful guide in that journey. Thank you all. Improving your knowledge is the only way to become a successful investor. I can show you the right path to achieve that goal. See you in the next video.